Now that buying and selling are clear and we know how to open a position, we need to move on to discuss the most important and useful tool in a trader's toolkit, the order. What is an order? It's a command to the broker to carry out a currency transaction when the price of a specific currency reaches or falls to a prescribed level. Now, for example, the euro is at 1.24. We reckon that when it reaches 1.224, there'll be a sharp rise in price, and we're ready to buy at this price. We give the broker an order to buy 100,000 euro against dollar at the price of 1.2240. That's all there is to it. The first advantage of such an approach is that we do not have to follow the market. We can go off and relax. The second is that the deal will be made at exactly the specified price. Any psychological distractions like fear or indecision are definitely eliminated. There's nothing further to do technically either. The order has been placed and will remain active unless cancelled. Of course, it's perfectly possible to close a position as well as to open one with an order. The most important closing order is a protective one known as the stop loss. This order limits the amount of money we can lose on a position, as it closes the position when price has moved against us to a preset level. In this way we manage our risk by deciding in advance how much we are prepared to lose. A stop loss is usually placed with a take profit order, and this order closes a position when a certain level of profit is reached. When the order has been placed, it is designated active. As soon as it has been carried out, it is designated done. And this is how they are recorded automatically in your trading reports by ID system. Ideally, we should place stop loss and take profit orders simultaneously. But if one of these orders has worked, it's necessary to remove the second. Otherwise, it will open a position which we do not want, and this could cost us. To avoid this inconvenience, click one order cancels the other in ID system. One cancels other order, or OCO, is an order which cancels itself out. What I mean is, if the stop loss has been carried out, the take profit order is cancelled, and vice versa. The execution of one order automatically cancels the other. What could be simpler? And that's that. What should we do if we want to open a position using an order and we want to preset our stop loss and take profit orders, and we want the broker to do this himself without our participation? ID system provides if done orders for this circumstance. Click If Done Orders at the bottom of the window. You will then be able to set your stop loss and take profit, which will only become active when the opening order is executed. The whole thing is set up by simply clicking Place. When this composite order has been set, the opening order is active and the If Done order is standing by. Later, when the opening order has been done, the If Done order will become active, and when price reaches the pre-designated level, this order will either be carried out as a stop loss or a take profit.